This video is still on basis period, right? You guys asked for a transition example. There's need for transition example because, or there's even the concept of transition because some companies are like on the line, right? Some companies are in between using the old provision and the new provision. For example, this company, Legwork Limited, that was incorporated on in September 2019 and commenced business on 1st of October 2019. And they said the first set of the financial statement was prepared up to 31st December 2020, reporting an assessable profit of 6 million, assess the company to tax under the correct basis period and relevant years of assessment. So, first of all, understand the example. Legwork Limited, the incorporation date is not relevant, it's just the when did they commence business. So, be looking for that word commenced business on 1st October 2019. So, the thing is that when this business commenced operations, it was the old provision that was applicable at that time because Finance Act 2020 started from, I think, 13th of February or 13th of January 2020. So if you have an example probably in the exam and you see that they said a company commenced business on 1st of July 2005, you cannot apply the 2020 provisions for that company. You have to apply the normal commencement rule and all of that. So if you do your basis period, right, under the new provision and you are having overlap, just know that it's wrong. And if it's not following preceding year basis, just know that it is wrong. Okay. So how are we going to solve this question? This is like a transition question, I guess. I saw it online. Legwork Limited. So you write the name of the company and you also write what they ask you to do in taxation. You know these things actually, these things carry marks in exam. Just write accessible profit for, they said for the relevant years of assessment. Okay, so don't write for the relevant years. What is you that will not answer the question? What are the relevant years of assessment? So for 20 whatever years. So let's leave it because you don't know yet. So that you don't make mistake and start assessment. Okay. So let me use a clearer marker. So you start from your year of assessment. This year of assessment is also called tax year, right? Then you have your basis period here. So we're already solving, and then you have your accessible profits here. So okay, so pi means profits in economics. So the first thing to do, right, because it was incorporated in 2019. So of course, the old provision, you write 2019 here. You know that old provision at the year the company started, you write that year, and you say date of commencement 1/10 2019 to 31st December of that same year, right? 31st December of that same year. And this is 3 months, right? So if you want to get the profit of that 3 months, you ask yourself, did they give me the profit of that 3 months? No, they didn't give you. What profit did they give you? They gave you 6 million. So, and they said the first set of the financial statement was prepared up to 31st December 2020. So the first financial statement they ever prepared was from 1st of October 2019 to 31st of December 2020. How many months is that? So for that period, they made 6 million as profit. Let's count how many months that is. October 2019, October, November, December, January, February, March, April, May, June, July, August, September, October, November, December. That's 15 months. You can write it out too. You can't count his fingers because you're going over your fingers again. You might have forgotten how many times you've gone over it. So you can write it out. October, November. So you have 15 months. So in 15 months, they made 6 million naira. So what do you do here? You prorate, which is a normal thing, right? So you have 3/15 because you're looking for 3 months. October, November, December. 3/15 times 6 million. 1.2 million, right? So 1.2 million naira. Then here, so what do you write next, right? You write 2020. Yeah, your next year of assessment, your next tax year will be 2020. See, in the old provision, right? Because by the time this Legwork Limited now enters 2020, they also say Finance Act. They not be like, we just commenced operations in 2019. How would they assess themselves to tax in 2020, knowing that it is now the Finance Act, right? Knowing that it's now Finance Act provision that is in place. So it's going to be on preceding year basis. So it will be, then what is the preceding year basis for 2020? You know that's 31st December, right? 2019 to 1st of January 2019. How do we why are we using 20 December? Because that's when they report their accounts. They said it. So if you look at this, you can see that there's already overlap. So normally, right, you should continue from 1st of January 2020. You should not be starting from 1st of January 2019, of which the business was not even in operation at this time. They said they commenced 1st of October 2019. So why are you assessing 1st of January 2019 when the business was not even in operation up until? So there are two things wrong. This is impracticable because the business was not in operation, and two, there's overlap. You've taxed this October 2019 to December 2019, which is also in these 12 months. So there's an overlap of 3 months. So this is impracticable. Where's my duster? So this is impracticable. So this would have been, like I said, this would have been what would be applicable for the new provision, right? It's not possible for you to assess for tax, right? So you won't. There's no assessment. There's no basis period. So for 2020 tax year, there's no tax. I mean, there's no assessable profit and there's no basis period. That's just it now. Then let's go to 2021 year of assessment, right? So normal preceding year basis, you continue. So you have the preceding, when you see 2021, the preceding year is 2020. So the basis period was in 2020. Ask yourself, what is the accounting year end? 31st December, right? 2020. So it started on 1st of January 2020. Does it make sense that after this period, this one ended? So this example feels so simple. And this is the only example I brought for this. Maybe I'll complicate the example so that we can, let's look for loopholes in this thing. So you can see that from 31st of December 2019, the next basis period is 1st of January 2020. So it makes sense. There's no gap, there's no overlap. What else? It follows preceding year basis, which is the rule. So this is 12 months, right? So and they told you that the profit that was given was for 15 months, from 1st of October 2019 to 31st of December 2020. See, that's what you're looking for. But you're looking for it from 1st of January, 12 months. So you say 12 months over 15 months times 6 million, and that will give you 4.8 million. So that's it. So if you are giving an example, I think somebody like, if you're giving an example that is before 2020, the old provision applies. And if you're giving an example after 2020 or 2020 and above, the new provision applies. Then you now start looking out for overlapping. If there's overlapping in your commencement example, when you're putting your basis period, you now try to adjust the overlapping. Let me change this example to something that is more complex. Because I usually think that when you use the 1st of December as accounting year, and it's kind of simple. Let's say 30th. I just pray this video comes out well because I'm just doing freestyle now.